ANZ is set to buy Suncorp's bank assets in the biggest financial services deal in more than a decade. Only 3 balanced superannuation funds made money last year, and the world is running out of Dijon mustard. It's Monday, the 18th of July, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. How's your weekend?
It was actually really nice. It's good to get a bit of sun, get outside, play with the kids. I think everyone's actually had a good weekend.
Yeah, I think everyone's very upbeat this Monday morning because it didn't rain.
Isn't it funny how much we're cheered just by the absence of rain for a single weekend?
Yeah, it sure is. But then we'll find out in the next few minutes here. There's lots of bad news around. So when the good news is there, such as the sun shining, take advantage of it.
And you had you're obviously back now. You were on the Gold Coast last week. You were broadcasting remotely. And how's it feel to be back home and no kind of holidays on the horizon?
Well, dreadful. But you know, when you're away, and particularly when you're working when you're away, nothing kind of works quite right. And so you stress about turning your computer on and setting it up and making sure the studio works. And so I'm just relieved to be back in the studio doing normal day-to-day stuff.
Yeah. No, well, welcome back. I mean, not that you were ever really gone because, I mean, we talked every day last week anyway. But anyway, on with the show, Sean. There is plenty to kick us off for the week. It's actually a big day today. We've got a good interview coming up with Dr. Christian Bayliss, who is the founder and chief investment officer of Fortlake Asset Management, all about fixed income investments.
That's right. I mean, it's an asset class which people don't know a lot about, and certainly it has not been top of mind for investors for more than a decade now, but suddenly it's back.
Yeah, that one's coming up a little bit later on. But first, Sean, we love deals and we love talking about big deals. And ANZ is working with Brisbane-based Suncorp to buy the Queensland Group's banking business for around $4.9 billion.
Yes, it's been a frantic week for ANZ. Last week, it was looking at buying accounting software group MYOB, but that's been put on hold as it tries to pick off a much larger asset, Suncorp's bank. According to media reports, negotiations were ongoing over the weekend and a deal could be announced. In fact, it seems almost certain to be announced as early as today. ANZ would have to go to shareholders to raise about $3.5 billion to execute the deal. Remember, the bank's share price was under a lot of pressure last week, which suggests someone thought it would be doing something. Anyway, it looks like it's going to buy the banking assets of Suncorp.
There's been plenty of deals around, Sean, but not so much in the banking sector.
Yeah, that's true. If the deal goes ahead, it would be the biggest bank acquisition since Commonwealth Bank bought Bank West. That was back in 2008. Westpac bought St. George then as well. That one was worth about $18 billion from memory. For ANZ, it adds a substantial retail network into its operations, including about $60 billion of customer loans, mostly their mortgages. And of course, that's an area where ANZ has lagged the other 3 big banks. For Suncorp, it would end its bank assurance model and leave it as the country's second largest insurer behind IAG, Insurance Australia Group. A deal would end the whole bank assurance era, where financial service companies took on banking and insurance and wealth management. Not that long ago, bank CEOs were saying that was the future of the industry, but there's been too many conflicts of interest and mishaps over the years, think the Royal Commission into Banking, and those strategies have pretty much been unwound by the big 4 banks and now by Suncorp.
Okay, so how about local markets? Where are we starting the week?
The S&P ASX 200 finished Friday down 0.7% to 6,606 points. For the week, the bourse was down about 1%, though futures markets suggest it might jump a little today. That's because of Wall Street. I'll tell you about that in a second. Last Friday, the banks were hit hard in the morning and then bounced back. Investors are worried about an economic slowdown triggering a jump in bad debts. Commonwealth Bank and Westpac both ended the day slightly lower. ANZ was off 1.5%. Maybe someone did know something last Friday, Michael. And National Australia Bank was slightly higher. Coles, Woolworths, Wesfarmers and CSL all rose. Iron ore prices fell heavily late last week, falling below $100 a tonne, taking the share price of the big miners with them. Back in April, iron ore was trading close to $140 a tonne. By the end of Friday, BHP was down about 3.7%, Fortescue was off 5.7% and Rio had fallen 2.2%. In Rio's case, there was more to it than falling iron ore prices. Its flagship iron ore division said it's suffering a surge in absenteeism and rising unit costs. Analysts said Rio's commentary suggests that the cost of exporting iron ore from Western Australia this year will be about 5% higher than previously expected.
Okay, and what about global markets?
It was a strong weekend for Wall Street, with the major indices ending higher. Retail sales figures in June were solid, while earnings season so far has been broadly positive. Figures also showed a drop in long-term inflation expectations, which are critical. Both the broad-based S&P 500 and tech-heavy Nasdaq jumped around 1.5%, while banking giant Citigroup jumped 13% after beating profit and revenue estimates for the June quarter. Michael, crude oil was slightly higher over the weekend, trading around $100 a barrel. Gold slide continue. It's back down to around $1,700 an ounce, and the Aussie dollar bounced a bit, up to nearly 68 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, just 3 superannuation funds made money in their popular balanced option last year, demonstrating what a disaster of a year it's been for investing.
The 2022 financial year is one to forget, Michael. Research house Super Ratings has released the top performing funds with exposure to growth assets of between 60 and 76%. That's the majority of super funds in the market. The top performer last financial year was Hostplus, which returned just 1.6%. Qantas Super and Christian Super were the only others to end the year in positive territory. Across all the funds, the average return was minus 3.1%. So when you check your fund, if you're in a balanced option and you did better than minus 3.1%, you outperformed. If you did worse, your fund underperformed.
Okay, so it was a bad year, but superannuation is obviously a long-term product. So do we care that much about 1 year's performance?
Very good point. Not really, unless you're retiring now or in the next couple of years and you're accessing the money. You don't want it to be going backwards. As you say, though, it's a long-term asset. And the winner over 10 years is, once again, Hostplus, with its balanced fund returning 9.7% per annum. That's a much better way of judging superannuation funds. Next in line was the country's biggest fund, Australian Super Balanced, which returned 9.3%. Michael, and I know you have a genuine interest in that.
I certainly do. Sean, it was another poor weekend for the housing sector, with the preliminary auction clearance rates remaining pretty low.
Yeah, that's right. Sydney was at 57% and Melbourne was 55%. Nationally, the clearance rate was 56.4%, down 2.2 percentage points from the previous week. Once again, Adelaide was the best in terms of the preliminary clearance rate, nearly 70%. Canberra was 64.5%. Brisbane hit just 45% according to CoreLogic. That's a big fall for that city. The figures suggest the weakness in Sydney and Melbourne is now spreading to smaller markets. Michael, it's a better time to be a buyer than a seller right now.
Yeah, seems to be. And there are also some disturbing facts from the Bureau of Statistics about home ownership over the weekend, Sean.
This was a report in the Sydney Morning Herald and Age. It said that the proportion of Australians who own their home outright has halved over 2 decades for most age groups, while the proportion of people with mortgages in retirement has tripled. Very worrying.
That is a massive jump, Sean.
It sure is. Tripling of people with mortgages in retirement. And one of the biggest indicators in terms of a comfortable retirement is home ownership. And so if you can pay off your home by the time you retire and you have your super to fall back on, but like the only sort of excess you've done is to pay off your home, your trajectory tends to be much better than if you have a mortgage in retirement. So that is very worrying.
Yeah, pretty confronting. Speaking of confronting, the federal and state governments, Sean, are bracing for a surge in COVID cases, with the warnings now becoming increasingly dire.
That's right. Of course, on Saturday morning, the National Cabinet held an urgent meeting. It couldn't wait for the scheduled meeting today and agreed to reinstate the $750 pandemic leave payment for workers without access to sick leave. It will last until the end of September at a cost of nearly $800 million. Chief Medical Officer Paul Kelly has warned that the current COVID wave won't peak until next month, and the current variant has similar infection rates to measles. We are going to be hearing a lot more about COVID, unfortunately, in the next 6 weeks or so.
Yeah, sounds like it. Greens leader Adam Bant says he is willing to work with the federal government to help pass its climate legislation, but he wants the Labor Party to be more consultative.
Yes, Mr. Bant doesn't like the take it or leave it approach, which he says Labor is pursuing. The government wants to pass an emissions reduction target of 43% by 2030, and it needs the Greens and ACT Senator David Pocock to pass the legislation in the upper house. The Greens do have a few suggestions. They want the target to be a floor, not a ceiling. The Greens want to ensure that future governments can't change the policy. They want no new coal or gas projects, and they want the government to be held to account on its actions.
And Sean, there's plenty of talk around about Beijing potentially lifting its unofficial ban on Australian coal.
That's right. China has never officially stopped importing Australian coal, but a couple of years ago in 2020, it wouldn't allow vessels with millions of tonnes of Australian thermal and metallurgical coal to enter its ports. Treasurer Jim Chalmers at the G20 meeting over the weekend said it would be good news if sanctions were lifted, adding that China should lift bans on other exports to help rebuild bilateral relations. He said there was much anger within the G20 about Russia's invasion of Ukraine, particularly given it's triggered food and energy security concerns for many developed and developing nations.
Sean, tech group WiseTech Global has lifted its annual earnings forecast thanks to higher sales and cost savings. It sent the group's share price up 7% on Friday before it fell back, but still ending the day 3% higher.
Always good to have some sort of positive news story, Michael, I think. Would you agree?
Yeah, I agree. Absolutely.
I like WiseTech Global. It's a global logistics software business. It had been a share market darling. Pretty much everyone loves management, and the CEO has been there for a long time. But rising interest rates have hammered the company because many investors pin future earnings of tech stocks to rates. Higher rates means lower earnings in their models. WiseTech's share price is down more than 25% since late last year. However, they came with the upgrade on Friday, and it's good to see some good news.
Absolutely. Moving on to overseas news now, Sean, and COVID is sweeping through Europe and the UK, demonstrating that Omicron variants BA4 and BA5 are just as infectious in summer as they are in winter.
In the UK, the number of people with COVID in the first week of July was 3.5 million, up 29% from the previous week. That's actually 1 in 20 people. It's the highest ever for a summer month. And fourth jabs are being urgently rolled out across Britain and indeed across Europe. There was a 15% jump in cases in Europe last week, with France and Germany leading the way. There are growing numbers of hospitalisations, though no jurisdiction at this point is talking about greater restrictions. I think it's all about getting that fourth dose.
And how about this one, Sean? Porsche, a division of Volkswagen, is set to list on its own. But the thing is, not everyone thinks it's actually a good investment.
Porsche is telling potential investors that buying Porsche shares is like getting the best from Louis Vuitton and Ferrari, according to a report in Bloomberg. It says it generates healthy profits and significant sales volumes. Porsche makes about 300,000 cars a year, and it's pushing hard into electric vehicles. It is expected to become a major player in that market. But not all investors are that enthusiastic at the moment. Now, markets are very volatile. Selling luxury goods is pretty tough when interest rates are rising and there's a recession in the pipeline. And also, not all the shares are being sold. Volkswagen will hold a large chunk of the company. The IPO is expected to be launched in September, and the company forecasts the value of Porsche to be about 80 billion euros, assuming it goes ahead.
And finally, Sean, this is one we mentioned at the top of the show. France has run out of Dijon mustard, which is really a crisis in the food world, isn't it?
Yes, the home of gastronomy is running out of one of its prized ingredients, mustard, Dijon mustard specifically. There are a few things going on. There's been bad weather in Burgundy, home of the brown mustard species used in Dijon. Another big producer, Canada, has been hit with a heat wave, cutting its exports. This is all according to the Financial Times. Then there was the invasion of Ukraine. Now, Ukraine apparently is another brown mustard species producer. Wholesale prices of the seeds have risen by up to 300%, and shipping and transport logjams have not only meant prices have gone up, but they can't actually shift the stuff around. French stores have literally run out of stock.
Are you a mustard fan, Sean?
Sort of, sometimes.
So it seems like you're not going to be too worried about a global mustard shortage.
No, I don't get Dijon. I like seeded mustard. I don't like Dijon is the actual answer. What about you?
Yeah, I'm probably about the same. You know what? The truth is, I can't handle anything hotter than about a piece of bread. So I am...
Right. Stay away from the mustard.
That's right. Yeah. Unless it's ultra mild, I'm probably going to stay clear. And I really shouldn't admit that publicly, should I? Makes me sound a little less tough than I like to project. Anyway, up next, Sean, is the Fear and Greed daily interview. And our guest today is Dr. Christian Bayliss from Fortlake Asset Management.
That's right. We go through what's happening in fixed income markets. Yields on bonds are at a level where they're suddenly attractive again. So we talk to Christian about that, and he has some really interesting views, particularly around how risky bonds are. And then kind of the common view is that government bonds are risk-free, but he makes a very good point that they're not really risk-free.
Yeah, I found that was actually probably the most eye-opening element of the chat, because you just assume that bonds are pretty much risk-free. And as he outlined, there are some changes happening there. It's a really good chat, but of course we are not an investment podcast, and you should always seek your own professional advice before making any investment decisions. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, Stephen Koukoulas joins us for the week ahead, looking at everything coming up this week in economics. Thank you, Sean.
Thank you, Michael.
It's Monday, the 18th of July, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.